Okay, so we're going to review the financial literacy vocabulary. You should have most all of this in your journal already, but there are a few things that I'm adding that we didn't cover back in the fall, so we're going to go over them today. So please make sure that you copy these down. So you need to go through, you need to find your notes on financial literacy, and you need to follow along, make sure you have everything. What you don't have, you need to copy into your journal. If you don't have your notes from financial literacy, you need to copy them down now. Okay? All right. Blank is money you earn. Taxes and deductions are. Okay, so this one is gross income. Gross income is the money you earn before taxes and deductions are taken out. Okay, so this is the money you actually earn when you get a paycheck. Okay, now this is not the money that you're going to bring home. This is just what you actually make. So if you work 20 hours, so say you work 20 hours in a week and you are paid, let's say $7 an hour. 20 times 7 is 140. So your gross is 140. Now that's not what you're going to get paid at a regular job because they have to take out taxes. Okay, but your gross would be 140. All right, your net income is the money you bring home after taxes and deductions. Okay, so your gross is what you earn. So you earned 140. So say you make 140 and they take out $33 in taxes. You're going to bring home 107. That would be your net. Okay, so gross is what you earn before taxes. Net is what you bring home after taxes. So that's important to remember. Gross is before taxes. Net is bring home after taxes. Okay? All right. The next two vocabulary words are exactly the same. It's the money you make / earn. Okay? It has two different words that mean the same thing. That's your wages. And the wages is what you're paid. And income. That's the money you're bringing home. Okay? So wages and income are both the money you make or earn. Okay, income and expenses laid out in a plan over a period of time. That is when you're making a budget. Okay? When you are making a budget to see how much money you're making and how much money you're spending. So you would have a budget where you'd have a column for the money you earn and expenses, which is the money you spend. So say this would be how you would write out some kind of budget. Okay, I make $500 for working for a week. I get $100 for babysitting each week. So that means I make $600 a week. Okay, but then your expenses are, you got food, you've got gas, you've got entertainment, okay, whatever it happens to be. But in a budget, you have to make sure that your earnings and your expenses kind of match up, okay? The next one is when the income and expenses are aligned or equal. That is a balanced budget. Okay, so if I was, let's say this was my expenses, and this is my income. Let's say I make $75 for mowing lawns and $25 for babysitting and then $10 in allowance, okay? That's $110, right? So that means for you to have a balanced budget, you can't spend more than $100. All right, so 60, 70, 80, 90, 110, 20. So that's 120. So my expenses are greater than my income, so I need to cut down. Okay, food and gas are necessities. You have to have food to live, and you have to have gas to get to where you need to go to have your job. So you're always going to cut back on the entertainment. So you would say, let's drop the entertainment by 20 to 20, and that would make it $110. And then I would have a balanced budget. Okay, income and expenses are aligned. All right, expenses is money that you spent. Okay, an extra amount of income would be a surplus. Okay, a lot of families got the stimulus checks, and that is a surplus. That is an infusion of cash that you didn't know you were going to get, so it's an extra. Okay, it's not something you worked for. You didn't go out and get a second job or a third job. It's money that was given to you as a little extra. Kind of like for y'all, it would be like birthday money. Okay, that's an extra amount of income. All right, and then when you spend more than you make, that is a deficit. Okay, so when I spent 120 but only made 110, that gave me a deficit. Okay, all right. Extra money paid to the government, that is a tax. Tax is extra money paid to the government. Usually you receive some of it back. Okay, tax on land, farm, and home, that's property tax. Tax that comes out of your paycheck that includes Social Security and Medicare and is paid by an employer, that is payroll. Okay, that's your payroll tax. Tax paid on retail products based on a set percentages of retail cost. That would be your sales tax. Okay. Paid on goods and services. We're going to talk about that in a second. Tax paid to the federal government, and it comes out of your paycheck. This is the money that your parents get at the beginning of the year. Sometimes they have to pay back in, but this is where you hear your parents talking about filing their taxes. This is what your income tax. Okay. Things you purchase to keep, such as toys, games, and clothes. So those are your goods. Okay, anything that you buy, that you receive, are goods. That you keep. And then things that are done for you, such as haircuts, car washes, car repairs. Those are services. Even going out to a restaurant, that's a service. Okay, you're receiving you're getting the food, but the server is providing you a service. Okay, by someone's preparing it for you and someone's delivering it to you. Okay, so goods are things that you purchase. Services are things that you purchase that are done for you. All right, last page. Bills that stay the same every month. These are things like your rent, your car payment, and your insurance. These are called fixed expenses. All right. Bills that change from month to month, such as gas, food, water, electricity. Those are things that are changing depending on how much you drive, how much you eat that month, how much water you use. Okay, how much electricity you use. Like if it's hot, you run the air conditioner more. These are variable expenses. Okay, these are things that change. Okay, they vary from month to month. All right. Written document asking a bank to pay a certain amount from your account. Okay, this would be a check. Okay, a check. When a check is written, it is written on a written document that you've received from the bank. And you're sending whoever you write the check to is going to send it to the bank, and the bank is going to, in return, send them your money from your account. All right. An identification card issued by a bank that allows you to buy items and services immediately. I missed a word. And, pay later. Okay. If you're buying it now and paying later, that would be a credit card. Okay. It also has interest. So even though you're buying now, paying later, you still will have to pay an interest fee, which means you're going to end up paying more than what you actually paid for the item. Okay. All right. The next one is an identification card issued by your bank that allows you to immediately use money from your account. This card comes with, usually, but always, comes with a personal identification number, which is called a PIN number. It is to be kept safe and private. You don't want anybody getting your PIN number. And this is a debit card. Okay. All right. And a couple words that I didn't put on there. Okay, withdrawal is when you take money from an account. Okay, so when you go to the bank and you withdraw money out of your the ATM, you're taking money from an account. Okay, deposit. Well, try that again. Deposit. Okay, that's when you add. Okay, you're adding money to your account. Okay, so withdrawal is when you're going to take money out of your account. So you go to the ATM and you withdraw money, or you go to the bank and withdraw money. And deposit is when you're adding money. When you add money to your account, you're putting it in. Okay, so taking it out. So that would be like, I'm going to write subtracting. Okay, withdrawal is you're subtracting money from your account, and depositing, you're adding money to your account. Okay, all right. So that's all for today. It's just going through these words, and then what we're going to do is tomorrow we're going to use these words as part of a review. Okay, so I will send that to you tomorrow.